Well, absolutely, Tamanna. They're talking about the Q4 numbers, what we can expect, and they have a couple of upgrades. So let me first talk about what the expectations are from that CLSA note. What they seem to be suggesting with regard to top line is TCS will lead the pack, at least the larger pack, in the top line growth. 1.8% sequential is what they're expecting. This is constant currency, mind you. BSNL contract is going to drive that number. Outside of TCS, let's pull up the others as well. Infy, Wipro, LTI, Mindtree, Tech Mahindra. Absolutely flat, right? 0.3 is what they are projecting on Infosys, sequential constant currency, to a decline of 1.5 odd, which they are projecting on Wipro. With regard to margins though, flat EBIT margins expected across the board except HCL Tech and Infy, where margins are expected to shrink a bit, and where Tech Mahindra is concerned, if we can roll over, Tech Mahindra is concerned, margins are expected to expand sequentially, but that's also because of certain one-offs which have been parked in the last couple of quarters. So maybe that will aid margins for Tech Mahindra, maybe not the right base there. In terms of commentary, Q4 has been slow in terms of deals. Deals have been far and few, except one big win that TCS has had. No major deals. Even tech budgets currently are constrained, limited. That's the sense. Mind you, Accenture commentary also came into focus earlier this quarter, where they spoke about weak demand, uncertain macro, conservative guidance across the board. CLSA also continues to give this conservative guidance. There's an unchanged outlook as well. There's no real major change. So let's talk about the FY25 estimates that CLSA is expecting some of these companies to report. 4 to 6% in constant currency there, 5 to 7 for HCL Tech, and Wipro absolutely flat for Q1 FY25, of course. On the margin front, absolutely flat, but the good part is no decline from here, so that's possibly a positive. Let me flip over and try and look at the ratings and targets. TCS, HCL Tech and Tech Mahindra have been upgraded, so that's a positive, but that is also because, and CLSA cautions here, that is also because of the fact that they've rolled forward their earnings estimates, and therefore there's a slight bit of change in the target prices, which is what has led to that change in rating. So that's one. Second, they continue to flag caution. So despite this positive rating change, they continue to flag caution on IT.
Anything in this report, Harsh, which explains what's happening with IT stocks today? Because it seems quite circumspect, to be honest.
Well, Tamanna, it's the same story as Q3. There's no real big change the way I see it. You know, when I'm looking at some of those IT stocks, if we can pull those up, they're doing fairly well in trade today, but except for a TCS, which is expected to deliver a decentish kind of a revenue number sequential for Q4. Outside of that, you're seeing absolutely flat. But the commentary, as well as going forward, maybe you know, they start rolling forward towards Q2 and Q3 in terms of their guidance, which could start to see that uptick. So what I think CLSA continues to believe is, as you roll forward, there is a possible upside from here because the worst is already priced in.